Hey everyone, me Kevin here. In this video, we're going to talk about what Cathie Wood just said. So take a look at this. Cathie Wood just said that in November, we learned that retail inventories rose more than 2%, the fastest pace since the 90s. And she's right. When I look at the average of retail growth on a month-over-month basis, the average over about the last 20 years is about a 1/3 percentage point increase in inventories. We had a 0.8% here in 2016, 1% in 2020. We had a 1.3% over here in 2013. Another 1.3% in 1999, somewhere up here. But the point is 2% is a lot. She's not wrong that is a large bump. And what we're going to do is we're going to keep breaking down her response here to see what we think about her conclusion from all of this. Do keep in mind this video is brought to you by Trends and the programs on building your wealth. More on Trends in just a moment, but keep in mind, whatever you end up getting, consider buying something before the end of the year so you can get that tax write-off, especially on those programs on building your wealth linked down below with that coupon code expiring January 1st. We're doing a quick little 48-hour sale, so then the price will go up again. But anyway, let's see where Cathie's going with this. She's suggesting that retail inventories rose more than 2%, the fastest pace since the 90s. At the same time, imports are up 4.7% and exports dropped 2%. Okay, so basically, we're bringing more stuff to America, we're sending less stuff out. This kind of makes sense. Europe is in a big slowdown. The Asia-Pacific region is doing nowhere near as well as we are in America in terms of at least keeping the economy booming. Unfortunately, Cathie doesn't mention this here beyond just mentioning that, hey, retail inventories are up and consumption is flat. Now, she does use the inflation-adjusted phrase for inflation by suggesting that real consumption is flat and that savings rates have declined. But really what she's setting up for is that, hey, if we're bringing more junk in and we're not getting it off the shelves, then prices are expected to come down, which could create deflationary pressures, right? But before we keep going with what she mentions in her tweet, I think it's worth looking at a little bit of data and seeing, is Cathie on the right track here? Is she on to something? Or is she totally wrong? Or is there maybe a little bit of a middle ground? Let's look at it. But first, a note from our sponsor. Thank you to today's sponsor, Trends. Trends is the ultimate knowledge and networking hub from HubSpot. It's a networking platform where entrepreneurs and ambitious people gather to discuss ideas and collaborate. Trends is the place to surround yourself with smart, like-minded individuals. With Trends, you can discover the next big thing months before anyone else sees it. Trends also hosts vital business trainings that feel like MBA lectures. The lectures let you learn skills like advanced marketing techniques and how to raise money from venture capitalists. When you sign up for Trends, you get instant access to the entire Trends community. Take advantage of the special offer linked down below that you can only get on my channel. To start your 7-day trial, go to trends.co/meetkevin or use the link down below. That's trends.co/meetkevin to start your 7-day trial for just $1. So here's some articles that I pulled up with some research, and here's one from Neiman Marcus suggesting that their earnings margins are substantially higher than what we've seen in the past. And this comes from their October 30th report, which does indicate that consumers are willing to pay more money. We saw the same thing at Nike. In the Nike earnings report that just came out about a week and a half ago, we saw that consumers were willing to pay more money, that consumers were not demanding markdowns. And folks, we see the same thing at Chipotle, saying that, hey, their input costs aren't necessarily going up, that they're not having this cost pressure, but still, what are they doing? They're raising the prices because consumers are willing to pay for that. But maybe Cathie's right, because what happens if consumers stop spending, right? Well, let's see. We have the reiteration here that Cathie is right, that retail inventories rose 2%, the most since 1992. Wholesale inventories rose 1.2%, and the trade gap is widening. So who knows, maybe Cathie read this article here. U.S. merchandise trade gap widens to a record as imports surge. Okay, I know that, well, when I say I know, I think I'm like 95% confidence Cathie reads Bloomberg and Barron's, because a lot of times we see the same articles and then I see her tweets. But anyway, Cathie didn't mention this, which I think is worth noting. Take a look at this. Foot traffic at TJ Maxx, Marshalls rose 14.7 and 16.2% between December 1st and Christmas Day. So yeah, inventories went up in November, but compared to 2020, we actually have more foot traffic during this COVID surge. Like, despite Omicron, which is mostly a nothing burger, we know that, even though the market was fearful for a while and there was a lot of FUD about it, we know it's mostly a nothing burger, which hopefully it stays that way, knock on wood, right? We don't want it to turn more severe. Or evolve into some other crazy variant. But anyway, same thing is true for Burlington Coat Factory, 17.5%, Ross Stores, 22.2%. So last winter, yeah, we had more potential concerns because it was our first winter going through COVID, but still, you had more stimulus then. Now, you actually have potentially less stimulus, less unemployment money. You do have the child tax credit, but that's coming to an end. And like Cathie said, consumer savings are going down, yet foot traffic is up during the Omicron surge. In fact, if we look at The Economist, we could see the following here, that, travel to workplaces is falling about 25% in America, but retail and recreational activity has continued to recover in America, as well as in places like the United Kingdom and Germany. So according to mobility data, people are still out there spending. And look at this. This right here is a piece from Bloomberg showing a comparison of foot traffic and shopping at specific stores. And the black box here, the black circle, is comparing 2021 to 2019, and the little blue circle compares 2021 to 2020 rather. So any negative you have over here means you're getting this sort of decline in traffic. So you're getting a little bit of a decline in traffic at Walmart and at Best Buy, but Target is freaking kicking butt. Costco's kicking butt, and BJ's Wholesale has recovered and is doing quite well as well. So you're seeing this overall a slight decline from 2019, but we're still doing pretty dang good with our foot traffic, which implies that spending could still be strong. Now, this is in contrast to the consumer sentiment report. Now, consumer sentiment always seems to be bearish of the sentiment of the day, and that's what she mentions here next. According to the University of Michigan, their consumer sentiment, which she believes is the best survey on the consumer sentiment fell to its lowest level during November and December. Now, personally, I believe that's because people are freaking out over the Federal Reserve ending their bond buying, starting their taper process, eventually going to raise rates, and the market got kind of crappy there at the beginning of December and at the end of November. And consumer sentiment always seems to drop every time you get fear about either the Omicron variant, the surge we saw in Europe in November, Omicron coming out in early November and then into December. So not a surprise, in my opinion, that sentiment would fall. But again, we don't really see that kind of adjustment here to Cathie's logic. And so I'm a little bit worried that Cathie is thinking we're definitely going to have deflation, because what she's saying is, look, retail inventories went up 2%. At the same time, GDP went up 2%, but spending didn't go up 2%. That means everything went into inventories. And she's basically saying we might be fighting deflation next year. We've heard this argument before. Now, I'm going to break through this a little bit more here, but I want to just give you a little pre-conclusion here. I'm worried that Cathie isn't necessarily looking at the uniqueness of businesses purposefully surging inventories because of the supply chain worries that we were not going to have stocked shelves. There have been a lot of fears that, okay, now maybe we overstocked, now it's time for discounts. But in terms of what we're seeing in mobility data and the consumer actually spending out there, most signs point to a continuation of spending. Now, JP Morgan did notice a slight decline in some spending globally, but that could also be as a result of a slowdown and lockdown, quite frankly, in Europe. But in the United States, I don't know. I want to ask you, it seems like things still feel pretty hustle and bustle out there. Now, I'm not suggesting that Cathie Wood is wrong, but I don't think things are going to be as extreme as Cathie says. Here's what Cathie says might happen. She believes that a lot of what's happening right now reminds her of Y2K, where basically you had tech companies run up and innovative companies run up, but they ended up selling down because they were not able to innovate yet then. She believes we're going to see the opposite of this. What we're going to see deflation in consumer products and appliances and non-innovative companies, and we're going to see a lot of that business go to innovative companies. And in other words, she believes that her book of business is going to do very well going forward. And that's because during times of fears of potentially inflation going away and fears of recession, people are going to go for growth at all costs. And if people go for growth at all costs, they'll go back to innovative stocks and the company she's investing in will do well again. Fine. And she ends by saying those investors should be rewarded handsomely. Maybe. Maybe. But I think there's a middle ground here. I definitely don't think that we're going to hyperinflation. I think inflation is going to inflect down, but I don't actually think we're going to go as far as seeing deflation in 2022 or, quite frankly, a risk of a recession. If anything, I think the bull market is somewhat just getting, well, I shouldn't say just getting started, but I think the real fruits of the efficiencies that we've built into so many of the businesses and companies that we've had, whether it's supply chain efficiencies, repairing the supply chain crises, employee efficiencies by laying off a lot of people and then hiring back new folks, new blood, so to speak, retaining excellent talent. I think we're going to see some incredible profit margins at companies. So I'm very bullish, really more broadly. So I think the summary out of all of this is I don't think that Cathie Wood is necessarily wrong. We know inflation is going to go down. But I think she's going a little too far by suggesting we're definitely going to deflation by not considering some of the other aspects as to why we saw this retail inventory surge and the fact that we still see shoppers out there like crazy, despite the fact that it almost right now feels like we're at peak Omicron. And so those adjustments not being part of her view soften her view substantially, in my opinion. So again, I'm not thinking we're at hyperinflation, but I also don't think we're at this Cathie Wood, we're going to deflation, only innovative is going to win. I think we're going to have somewhat of a middle ground. And personally, I'm pretty optimistic about 2022, which I know is hard when there's so much of these, we've been having so many of these false rallies and false starts, I should say, to rallies. Hopefully the rally that we're seeing today continues. For example, RK is up 4.7% today. I hope this continues. But we've seen so many false starts of ARK go from 90 to 100 and then back down. I hope we don't have another false start and some more red over the next few days. But I'm optimistic for 2022 long term no matter what. So I'm excited. All right, folks, these are my thoughts. Thank you so much for watching this video, my thoughts on what Cathie Wood just said, and we'll see you in the next one. Thanks again. Goodbye.